Okay, welcome guys. Stock market technical analysis. We typically just get right into the charts. I'm going to point out exactly what I'm seeing. We're going to use technical analysis, obviously, to anticipate where the markets are heading. And, we call out trade ideas on this channel. So if you're new, then leave me a thumbs up. I think that's something that you guys can do for me. I look back at the last few videos. I'm getting about 200 likes per video, or about 10%. Of the viewers. So if you guys could just make a little bit more effort to help with my channel, it does help, apparently help the channel grow, then I'll continue to put out the videos. So now let's get on with the cues. All right, couple things I want to point out about the cues. One, we had the breakdown of this lower trend line right here on the hourly, but it's not impulsive and it's just not really it just doesn't look like what I'm looking for on a sell signal. So this one, this one just didn't really have a good solid breakdown. So I don't see a sell signal yet in Qs. It does have negative divergence on the daily. So if you look at that, there I have it circled right there. There's a lower high in the PPO and the RSI, and when we made this higher price right up here. But I just, maybe it wants to rally one more time or something. I'm just not seeing the sell signal yet. So negative divergence can extend. It can continue to build and build and build. And that's typically how it works. That's why usually when I have a trade idea that I point out on this channel, I talk about it for typically weeks before it actually starts to work. And that's just the nature of, negative of divergences. They build and then price finally starts to react. So on this one, I just don't see a breakdown. If I look at the NASDAQ futures, you can also see you've got this support shelf right here. We came down, hit it, and we dipped below it yesterday, but we're back above it on the NASDAQ future. So in general, I just don't see the breakdowns that I'm looking for to short the Qs. I just don't see it yet today. Now, if we start to get some impulsive selling today or maybe tomorrow or something, and then we'll have that sell signal, but it's not there right now. Moving on to the SPY. So the SPY, we did get the sell signal right here on the SPY. Here's your hourly breakdown, and you can see this was the trend line that we were walking up, and we got that nice impulsive breakdown. We're coming back in for a back test today. If you look at the daily, it broke down yesterday. It wasn't super impulsive. Today they're coming back in for a back test. So we got to see how this thing reacts right around here. If it rejects, if you run up and hit this trend line and get rejected, that's just further confirmation that we are going to likely go lower. But again, because I don't have that sell signal in the Qs, in the triple Qs, the technology sector, it kind of puts a little bit of question on this SPY breakdown. And the reason being is the Qs is like 26% of the S&P 500 in the market cap weighting. So it makes up about a quarter of what the price action is in the SPY. So usually when you want to see a breakdown, a broad market breakdown, you want to see both of those break together. And I'm just not seeing those. So until I see a little more confirmation, I'm not really interested in doing any indices shorts. I'm not short the Qs or SPY or the IWM. So let's move on to IWM. So this one, all right, so this one tagged the trend line. Here's the trend line that I've got from the March 2020 lows. You can see on the daily chart, we hit support here, hit support here. They stepped in a little early there, and recently, there's your support. This is where the buyers should be at, and so far, this is where the buyers are at. You can see they started to break it below yesterday and today, but it recovered both days. Today, recovering back up. So no breakdown, no sell signal longer term on the IWM. All right, this is where the bulls are at. This is where the buyers are buying this thing up. So I'm not, if anything, you'd want to be long right down here at this trend line until you see a break of that trend. The one reason why I'm not so interested in being long is because we have this negative divergence right here on the daily chart. Big negative divergence that's just been, building. There's your divergent high, and we came down to the trend line. So we could run up, and here's the thing. We could hold here, run up and put in another divergent high. That's 100% possible. Or we could fail here, What I'd be more interested in, because the negative divergence is there, I'd be more interested in letting this run up, put in that divergent high, and look for a short opportunity up there. All right. If we had bullish divergence intact, that's when I'd be looking to go long, when we have bullish divergence. But we have bearish negative divergence. So I'm more interested in finding a good solid short, because the thing is, you don't know if this is going to run up and make a new high or if it's just going to break down right here. Nobody knows. So you have to just use the indicators in your favor. Right now I see negative divergence on that one. So I'm looking more for a breakdown. Even if it wants to run up, I'm just going to let it do its thing, and then look for an opportunity to position short. Someone asked me to help them with Walmart, the Walmart trade. So I've looked at Walmart for a while. Walmart has negative divergence on the daily chart. However, you can see we just recently hit this support right in here, and that support comes all the way back to 2014. You can see this was a trend line here, held resistance there, held resistance all through there, and then finally broke out, and we came back down, undercut it a little bit. But again, usually when you have a trend line, you're going to slice through it a little bit, run some stops, and then it recovered it, and it held support. And it recovered it, came back in, tested it again, held it right at that support, and then, kept moving up. So in general, in the short term, it's bullish. I think we're likely going to go fill this gap up here, right up there at about 144.55. And I don't see anything that's really going to stop us from filling that gap. Maybe even put in another high. So in general, just in the short term, I see it bullish. I wouldn't change any position on that. I'm not positioned in this one, but that's what I see. Here's Tesla. Someone asked me about this as well. All right, Tesla, I've got this trend line right here on the daily chart. You can see we held support. Held support there, we held it there, and there. So that's the trend line I'm watching. A break of that trend line would be the next sell signal. Next support is down here at about 463. So that's what I think is going to happen, but there's no break of trend line, no reason to position in this one until we have a sell signal. Yeah, that's all I see. We're just watching that trend line. BABA, I want to point this out. We might be in an area where you'd want to go long. On BABA, you've got this trend line here on the daily chart. Nice uptrend line right there. And you can see that we're basically coming right down to that trend line support. So it's under it just briefly, but it's not impulsive. So BABA's pretty much at support. Look for a recovery of this trend line. If it can't recover, and you get an impulsive sell-off, then that would be a sell signal, and we're breaking a longer term trend line. That would be extremely bearish. So just, it's at a level to watch that you could go long or short depending on what happens from here. So recovery to the upside would be bullish, impulsive breakdown would be bearish. Okay, let's take a look at Lennar home builders. So the home builders have been, they've been pretty much on fire for a while, really since COVID, and the 2020 drop. But recently we've put in a bearish rising wedge right up here. So you'll see there's your bearish rising wedge. And we basically broke to the downside of that bearish rising wedge. When we broke right here, and it wasn't that impulsive, because it wasn't that impulsive, you got the back test. So that was your objective area to short on the back test. And on the daily, we had negative divergence. See that negative divergence right there? So you've got a break of trend of a bearish pattern, a back test with negative divergence. That's basically the best setup that you can get when looking for an entry, and especially for this short entry. So going back to the hourly, this was your entry right here. Kind of right through it sideways. They popped it above there just a little bit. So you went underwater on the trade. Let's say you took it pretty close to that. You went underwater by about, not even 1%. It went against you, and then boom, big, sell off. Today, I've got this line marked out here at about 102.08. That was former support right in here. So, and we were actually support right there as well. We broke yesterday. Today, coming in for a back test, I added to my short position on that back test of that trend line. That's how I'm doing it. And if you look here on the daily, I'm looking for a move down to 95. That's our first level of support. You can see that was basically resistance back here. We held kind of support right through here. So I'm looking for a move down to that 95 area. And yeah, that still looks good from my perspective, especially with that back test today, the back test and rejection. Now, it hasn't been fully rejected. We might close right at that level today. I could see that happening. But again, I think it's likely that this is the area where it will be rejected and will continue moving down. So like that one still. Okay, let's take a look at gold, because gold miners have been, from a sector-wide perspective, have been some of my best, just the group as a whole has been a bullish looking group, the gold mining stocks. So gold, here's gold. We're looking at gold bullion here. If I go to the weekly chart, you'll see here this level right there back in 2011 and 2013 was major resistance. It's about 1790. That was the end of the last bull market. So yeah, you overshot it here on just this blow off top. But once you came back down, you tagged that level 3 times, and that was it. That was, proven to be resistance. And then gold went into a multi-year bear market. All right, it went into the bear market, built a big base, and now we've started what looks like a new bull market. So as I zoom into that 1790 level, which is right there, you can see another big ramp up and then a big correction that pretty much wiped out anybody who was bullish and was buying in this kind of this parabolic move higher. They all likely got shaken out of their trade as this corrected for many months. And then recently, if you look here on the daily, we put in the bullish divergence right down here. I have it circled. There's your bullish divergence. See how the PPO and the RSI are turning up. They were pointing up even though this was making a new lower low in price. The momentum was moving up, signaling a trend reversal is likely. And that's what we've seen, a reversal. But look at what we're trading at. We're running right into major resistance at 1790. So we're at a major level where we're likely going to get some sort of a reaction or a pullback in gold and the gold miners. And that's what I'm seeing so far. If you look at the hourly chart here, you can see we're kind of struggling with this level. So a few things to look for. One, what does gold do right around here? Do we pull back and maybe come back all the way down to this 1750 area, test that as support again? Or do we break out? It's a level where a reaction one way or the other would be expected. So I expect we probably get a pullback. That's what I would think that we'll do. So you got to watch that. However, I do think we're going to break to the upside on gold and actually start the next leg higher. I think this is just a temporary stop. We're probably going to consolidate here for a little while and then eventually get some sort of a breakout above there. So whether we get a pullback, test support, I would be looking, rather than covering my long positions, I have a lot of long positions in a lot of different gold miners. Rather than closing those out, I'm looking to actually probably add to those positions on pullbacks to support. All right, so that's how I'm going to treat this one, because to me, gold is in a bull market. As I roll out to the bigger picture, all the way back, this is gold bullion. Really, we hit a low back in 2015, and we've been making higher lows ever since. So when you're in a longer-term bull market, I look to buy at support and add to long positions. Until that technical picture changes, that's how you treat a bull market, and that's what this looks like. Let's take a look at Bitcoin real quick. So this is Bitcoin futures, and here's the uptrend line that Bitcoin futures have been in right there. We've just been trending up. We have been building negative divergence. Big, clear negative divergence has been building. So this momentum in this uptrend has been fading. And you can see as I zoom in, now we look for a break of trend. We're starting to get it. It's just not that impulsive. The buyers are here trying to hold the line, trying to, recover this broken support. Until I see some sort of an impulsive breakdown, I think it's just, we don't have that sell signal that we're looking for. So I'm watching for that. If it shows up, then the way I'll probably trade this is with proxies like Riot. I did take a short in Riot 2 days ago, and I covered that short yesterday. And this is what we got going on in Riot. We had this little triangle pattern that broke to the downside. But again, I covered it yesterday because I'm not seeing that breakdown in Bitcoin, and I want to see that sell signal in Bitcoin before these proxies, these Bitcoin proxies, are not going to sell off impulsively until we get that impulsive sell signal in the underlying asset, which is Bitcoin. So whether that, Riot, so that's why I covered my Riot. It was profitable, 8-10% profit in a day, covered it. This thing moves a lot, so you don't have to take a large position in this either. It moves 5, 10, 15% a day in different directions. So, maybe we back test up here to 46 and then reject. But again, until I see that breakdown in Bitcoin, I'm just kind of hanging tough on this one for a swing trade. If we break down, we do have a little bit of support. This was former resistance right here at about 29.30. You can see the resistance, impulsive candle breaking through that. So that's likely going to be your level of support. It's about 29.30 or so, right in there. So watch Bitcoin is really what I would say. Okay, sorry guys, might be skipping here. I had to take a quick break, but someone asked me to cover Nvidia. So here's the thing about Nvidia. Looking at this chart here, you've got a high right here. I have it circled. This was a divergent high. You'll see the previous highs here and here. We made a brief overshoot on that high and then failed. And from that divergent high, we broke back below that, that breakout point and pretty much dropped, that dropped about 20%. I think, and that pretty much played out for that negative divergence. We then made a new high right over here. So we'll just kind of circle that. That's a new high. However, not a divergent high. You can see here that basically we're making a new higher high in the PPO, and we made a slightly new higher high in the RSI. So in general, it's not a divergent high. You've got a higher price, higher momentum, no negative divergence. So I'm not really interested in shorting this one. You do have a breakout. I'd probably be looking to go long at this 588.30 area. That's all I see. I just don't see, I see momentum and price moving up. Okay, I don't see a whole lot else. I'm going to wrap up with this TAN. The one thing I want to point out on TAN, so we're starting to get what looks to be bullish divergence on this. Right here, you see how the momentum is starting to move up on the PPO, and the momentum on the RSI also starting to kind of move up, and yet price made kind of an equal low right in here, made an equal low right in there. So equal low in price, but higher momentum, that's bullish divergence. So we've got some bullish divergence starting to show up on the daily chart in TAN. I'm going to probably cover, I'm going to go ahead and close this trade out because it's starting to show up. We're at support as well. Support basically is right there at about 80.67 with the 200-day moving average right below it starting to move up. So yeah, we could run down and tag that 200-day, but we've got kind of a confluence of support in this area, and we're starting to get some bullish divergence. TAN has obviously dropped from the breakdown down to the support 27%. That might be all there is, and maybe this is going to start a new new move higher. So I'm going to go ahead and just wait and see what happens. Wait for the technicals to kind of firm up, but probably looking to just take my profit on this and look for the next trade. That's really all I got, guys, for this video. So thank you. If you're interested in learning how to use technical analysis to your advantage, take my course. Link is in the description below. Haven't seen a whole lot of activity on that recently, so if you're new, you can check it out. If you've already taken it, maybe let me know how that course went for you. And I will catch you guys on the next video. Bye.